public. Right over here, it's been crashing ever since. There's been no sign that e.l.f. beauty is going up. No sign at all. Like, look at this, guys. It's going straight down. What makes you think it's not gonna go more down? It looks like it could hit $5, $4, $3. It looks like it could completely go out of business. I mean, yeah, it could have good products, but many products are good, I'm sure, that are out there. I'm sure it's not the best product out there, so like what is he talking about? Okay, sure, it has a positive PE, positive earnings per share, but we can see that the outflow is much larger than the inflow for the most part. And when we look at the analysts are not even bullish on this company, and the analysts are usually always bullish. The analysts usually overextend and are bullish on for the most time, except when it comes to like Tesla. They have different mixed opinions with Tesla. But anyways, when we look at e.l.f. beauty, we can see it's almost at a slow point, nowhere near its highs. But now when we look at the chart, we can see that the pattern that e.l.f. beauty shows is it's been in a downward trend. Looks like it's going to continue on this trend, this downward path, as we can see in the bottom over here. We look at the financials. We can see the investing, and also the financing has been headed downwards. The operating has been excelling, but the investing and the financing slightly has been on a downward trend. We can see the debt asset ratio has been on a downward trend, and we can see the net margin has been on an upward trend. So this company does not necessarily have bad fundamentals, but the issue for me is, for the most part, is the graph. There's no sign that there's no time in this graph that it's ever gone up. You need to have at least one sign, like if it picks up and it goes above maybe above $13. If it goes maybe above $13, and that'll be like, whoa, now it's growing faster than it's ever been growing. But now we don't have no signs. It could just keep going down. And when Jeremy says he wants to put the majority of his portfolio into this, that is scary. This is another GoPro situation, ready to burst, ready to happen, ready to explode. This is what's going on. So hey, it's his money. Personally, I would not invest in this company unless I see that it has been going up. I see that right now there's no sign that it's ever gonna go up. Never showed a sign. Never, not even in the past. Like, maybe they're just gonna keep on going down. Maybe that's just the way this company rolls, and maybe it'll go out of business or become a penny stock soon. Who knows? It's totally possible. So anyways, there's my review. Smash that subscribe button, hit that like button, and check out my videos. And thanks for watching. We can see that if you would have invested from the start from January 2017, if you would have took $10,000 and you would have invested it in e.l.f. versus if you would have invested in the Vanguard S&P 500 index, what you would have gotten is you would have lost $8,000 with e.l.f. But if you would have grown money with the 500 index. The issue with e.l.f. is not only is it 50% correlated with the market, but the Sharpe ratio and the Sortino ratio are negative. This is bad news. It grows on average of negative 44%. On average, negative 45%, close to negative 45%. This is not good. This is what I'm talking about. And then Jeremy says it won't be hurt in a recession. People stop spending in a recession. People start hoarding their money. That could really hurt this company bad, and this company is 50% correlated with the market. This is why I disagree. I wonder what got Jeremy inspired into this company. Just because it's affordable? Just because it's cheaper now than it's ever been? It seems like it's gonna keep becoming cheaper. Anyways, thanks for watching, guys. Hit that smash button, hit that like button, and see you next time. We can see that e.l.f. is cheaper than its competitors, and it has an upside to this price target, and it's also profitable. So that's the good news about e.l.f. Beauty. The bad news is that there's no growth forecasts. So this is a sign of weakness in this company. On top of that, on top of no growth forecasts, it offers no dividends. Zero. Zilch. Nada. Zero. So that's one thing we can see about e.l.f. The e.l.f. company. We can see that the net debt levels are 2.3% of the operating profit. 99 million in net debt. 99 million. That's almost as much money as I have. I have a lot more than 99 million, so theoretically I could just pay off their debt. Maybe they should put me on board. You can see the forecast sales is expected to not make as much as it did in the last 12 months. So there's weakness already demonstrating in this company. We can see the forecast sales at 252 million instead of 267 million. This is a sign of weakness. The good news is that it's showing positive 7.3% return on equity. This is one thing we like to see in a company. This is good news. Good news. So there you guys have it. Hit that subscribe button, smash that like button, punch that subscribe button in the face, and thank you for watching. One thing about this company.